and private label hair care company. So as the video title said, today is Money Mondays, and we're going to be talking about credit cards that help rebuild your credit. Maybe you have bad credit, maybe you had okay credit, maybe you have no credit at all. Maybe you're in a situation where you filed bankruptcy, and it's not necessarily that you have bad credit, but bankruptcy in the eyes of a lot of creditors is considered negative or bad credit. So I'm going to talk to you guys about the different credit cards that you can use to help rebuild your credit or even build your credit. So first things first, if you're new to my channel, please go ahead and hit that subscribe button, and also thumbs up this video when you come in. The reason why I wanted to start doing these different videos is because I want to help you guys to rebuild your life just like I had to rebuild my life and still am rebuilding to this day. Okay, so I have one card that's actually in my pocket. All right, so let's get started. Okay, so let's give you guys a scenario. You decided that maybe at the age of 18 you couldn't wait to get credit, right? So when you get credit, most people at a young age, unless you're taught financial literacy or you were taught by your parents to understand credit, most of the time our biggest issue is that we don't understand credit and we just abuse it. I was one of those people at a very young age. I got my first credit card, which was Capital One. And when I got that credit card, it had a $500 credit limit. I was 18 years old. I had no money. And the moment I got the card, I splurged on 500 bucks. That $500 quickly turned into me owing Capital One almost $1,800. Why? Because the bill fell behind. I didn't pay it any attention, and I didn't have the knowledge to say, oh man, this was going to make a huge difference. All I knew was to use the money and keep it going. So that's why at my older age in life, it's almost like you're playing catch up, right? So when you play catch up, you know, that's where it's actually the most complicated. So having no credit is, it can be one of the harder areas to build credit, and having bad credit is also one of the harder areas. But having bad credit is actually better than having no credit. A lot of people don't know that. Bad credit still gives you a credit history. No credit, you have no history. And a lot of banks don't even want to give you anything because you don't have any credit to prove that you can be responsible. And then when you have bad credit, you have history, but it's bad history. So it shows that you're irresponsible, right? Also, like myself, I filed bankruptcy a couple years ago to try to clear my credit up. And I'll do another video on talking about bankruptcy and what I did and how it actually helped me rather than hurt me going forward. My credit now is in its best place. Before, when I didn't file bankruptcy and I had little things lingering around, it was so complicated for me to get anything because my credit score was low, my history was bad, or it was always a number of different things, student loans, whatever the case may be. So we'll talk about all of that stuff on this channel. But today, as I said, we're going to talk about a couple different cards that can help you rebuild your credit. So number one, if you've heard of a secured credit card, put a 1 in the chat. If you've heard of a secured credit card, put a 1 in the chat. And we'll talk about what a secured credit card is. Okay? So a secured credit card is basically a credit card that holds collateral using your money, but it reports to the credit bureaus. On the front side, it looks just like a regular credit card, but on the back side, you've actually put down a deposit, which is also known as collateral, to fund that card. Okay? So if you have bad credit, no credit, or even filed bankruptcy, secured credit cards are typically what is going to be the first things to be offered to you. Secured credit cards also typically have very high interest rates. Secured credit cards are typically backed by your money. So let's take example Capital One. Capital One is a card that typically will give you credit a little bit more than what you pay. And then on the back end, it's reporting as credit. Hold on, you guys. Sorry, you guys. Okay, so Capital One is one of those banks that will allow you to, they call it applying for a secured credit card, right? Technically, you don't really get denied for a secured credit card. Applying really is just going to tell them how much secured money they are able to offer you based on your credit right now. Okay. So when I did Capital One, this was right after I filed bankruptcy. I applied for a Capital One secured card. Okay. But you cannot apply for credit while you are still within an open bankruptcy. You wait until your bankruptcy is officially discharged and closed. And even if it discharges on this July 1st, you still want to wait until like July 30th or even August 1st for you to start applying for anything to help your credit, because that 30 days after, the banks are just now finding out that you filed bankruptcy, right? Okay. So Capital One, I applied for their secured card. I got a $200 credit limit, and I had to put $150 down as collateral. So basically, they extended me an additional $50 of credit through them outside of me having to put down $150. The way Capital One works with their secured card is after, I think it's 30 days. No, I'm sorry. After 3 on-time payments, they will reevaluate you, and then they will add more credit if they see fit to add more credit. So after 3 payments with my card and with Capital One, and with any time you're trying to rebuild credit, you guys, you always want to make a payment mid-month and then end of month. Okay, so if you want to pay off your balance, don't pay it off every time you use it. Creditors don't typically like that. I'll tell you why. It sounds great and it looks great in your eyes, but to the creditor, they're looking at it like, okay, you're not even trying to extend us the interest. Because guess what? That's how they make money from you, the interest, right? So if you're wanting to do like what I did, I would pay off my balance every single month. But what I would do is, let's say my balance was 125, right? My 125, I would pay at least $75 mid-month, and then I'd pay the remainder at the due date of my balance. So it would look to them like, okay, she's steadily making payments, right? And at the same time, we're going to extend her credit for her having such good behavior with our card. But there is a con or negative side to the Capital One card. After they increased my credit limit to $500 after making 3 on-time payments, because mine just started at $200. So my next increase was up to $500. What I've noticed with Capital One is they do not like to increase you. And I've had this card for over almost 2 years now. I think I'm going on 2 years having the same card. And the credit limit has stayed at the same number. And every time I ask for an increase, they say, oh, we don't go based on you asking for an increase. It's just whenever we feel like giving you an increase. And what I noticed was it never increased. So Capital One is okay for, trying to build or rebuild credit. But it's not one of those particular cards where they like to increase your credit limit. And most secured cards really don't. Most secured cards, if they're going to increase the limit, they tell you have to put down the collateral to increase the limit. And that's where you stay. Capital One is definitely one of those cards. So keep that in mind when you guys are making your choice. I'll show you guys. So this is what the Capital One secured card looks like. It doesn't even say secured, and you want to stay away from cards that say secured, because banks and stores and other places that are using credit cards will treat you as you are using a gift card and not a credit card. So you want to make sure that you get credit cards that don't say that they are secured on the front end. So this just shows as a standard credit card. Okay, it's a standard credit card, right? And that's what you want, right? All right, so Capital One is one of them. The second one is called Open Sky. Okay, Open Sky. There you guys go. Open Sky. Open Sky is also another secured card, but the way Open Sky works is exactly the amount that you put as your collateral is exactly the amount that it's going to give you in available credit. Okay? Most secured cards are not like the standard credit card where if you pay your balance today, it'll reflect tomorrow and your credit is available tomorrow. A lot of the secured cards, they make you wait 5 to 7 days because those secured cards want to make sure that those funds are in hand before they will extend you more credit. Secured cards are the most headache, but they are the best ones to rebuild or build credit. So Open Sky, what I did with Open Sky is I started out with $1,500. So I had to put the collateral of $1,500 and it sits there, right? But Open Sky is also one of those banks where if you want to increase your credit, you can pay more in regards to your deposit and it will increase your credit, and it's reported to the credit bureau that you have these limits. So if you want to start with $3,000, then you can start with $3,000 and it will show on your credit history that you have a $3,000 credit limit, and you're going to treat it as you would responsibly any other credit card. Okay, so that's very important when you are dealing with secured cards. Remember, you are trying to build or rebuild your credit. So I always tell people, if you are doing that, the most important part is making sure that you're responsible with it. The worst thing you can do is go and take out these cards and still be irresponsible. There's no point for that. Okay. Maryland, yes, I actually am going to get a Discover secured card because I'm working my way into getting an Amex. Amex does not provide secured cards, but Amex is probably one of the best looking credit cards on your credit report. An Amex card, because they are considered charge cards. Okay, they are not credit cards, they are charge cards. Amex cards, the name Amex, just like saying you live in a certain neighborhood and people recognize that it's a household name, and Amex on your credit history or an open Amex card is the best thing that you could ever have, because Amex is considered a charge card, right? So we'll talk about that in another video. But Open Sky is definitely one that I would recommend as well. The website is open, OPEN Sky, SKY.com, and you will go on there and you still are doing the same thing, you guys. You are applying, but at the same time of you applying with Open Sky, you are paying your collateral at that very moment. They mail you your card in the mail and you will use it just as responsibly as you would any credit card. Okay, and that's all, no matter if they're secured or unsecured. So the difference between a secured card and an unsecured card: a secured card is backed by your collateral. Unsecured card has no collateral. Okay. All right. So that is Open Sky. I can tell you, like I said, the interest rates on a lot of these cards are going to be high. Okay. They are going to be high because they know that it's typically people who are trying to build credit or they don't have any credit, and they are going to take advantage of it. They are definitely going to take advantage of it. So the Open Sky card, the interest rate is 17.39% variable APR. And then the Discover secured card, which is what you were speaking of on here, there is a 22.9% APR. And then keep in mind, you guys, that some of these cards have annual fees. So Open Sky's annual fee is $35, whereas Discover It, they don't have an annual fee. So you want to keep that in mind when you are making your choices on which cards to get. Open Sky, I like the interest rate, but I did have to pay that 35% annual rate. And I do not recommend closing credit cards, you guys. I don't recommend closing credit cards. That's actually one of the worst things you can do, because when you close that credit card, you run that risk of losing the credit history, and then your credit score will drop. Okay, so keep that in mind. Open Sky also does not necessarily do a credit check, but they still report to the credit bureaus. All three of them, they report to the credit bureaus whatever your credit limit is. Okay, you don't have any rewards with Open Sky. It does require a deposit and it has an annual fee. Cool. All right, cool. Another secured card that I can definitely recommend, if you are with a credit union and they offer a secured card, I would definitely get their secured card. I am with Navy Federal, which I have a Navy Federal secured rewards card. Okay, if you can get rewards cards, great. Rewards cards always give you back money in points. You can get discounts, whatever. Rewards cards are always great. The Navy Federal card is probably one of the best secured cards to have. The reason why is Navy Federal reevaluates your history every 3 months. You can actually call in and ask them to evaluate your history if they haven't. And once they see or they feel that you are responsible enough, they will then sometimes in turn transfer that secured card and create an unsecured card. And when it becomes unsecured, Navy Federal is notorious for giving you nice nice credit limits, but you have to prove that you are responsible with their card. So with me, I opened my Navy Federal card. I started with $1,000, and then the other day I decided to increase my limit to $2,000. And you have to actually be using that card, you guys. A lot of times these creditors don't want to increase your limit if they notice that you don't even use the card, because they're not making any money from you. Okay, they're not making any money from you. So if you don't increase the card, or if you're not using the card actively, they typically won't even review it, because there's no reason for the review, right? But if they see that you're using it on a continuous basis, you always keep your balance low, you're always paying your bill on time, that kind of thing, Navy Federal or normally your credit unions are good to go. Someone asks, how can I join Navy Federal? Someone has to invite you in Navy Federal, and they have to actually be a member at Navy Federal. So I have a client who has the same last name as me, and she invited me as her sister. And that's how I got into Navy Federal. And then I invited my whole family, and now they're in Navy Federal. So that's how it works. But Navy Federal also has a secure card, and most banks have secured cards. It's not just credit unions. Whatever bank you bank with, you want to start with their card, because that's going to build a rapport with that bank. That's going to build a rapport with that bank. What is the best way to use a credit card? Responsibly. It's not really there's a best way to use it, but you definitely want to make sure that you keep your utilization down under 29%. They say 30%, but I say under 29% utilization every single month. So if you know that your credit limit is $1,000 and you used $400, then you want to pay it down to at least $290 mid-month. So that at the end of the month, when they start reporting, because you don't know the day that they report, right? So when they report, they're going to report that you're always under 29% utilization, and you're never at that direct number of 30%. So that's what I typically do. You want to make sure that you keep your balance down. Right now, my balance on my Navy Federal card is not down. I can tell you the honest truth, because I use it to process shipping fees, which it should be more on the business side, but I use it because I just want to get the rewards from it until that time crosses over where I just get a business credit card. But business credit cards also depend on your personal credit, because typically you as the owner is the guarantor. And when you're like me and you file bankruptcy, that bankruptcy lingers back there. It's always lingering. So it affects a lot of the credit decisions that are made for you. I do have department store cards, but I would not recommend anybody getting charge cards for the different merchants, unless it's a merchant that you shop at every single day, like Amazon. Amazon is one that I would definitely say I want to get one, but the bankruptcy is lingering, and I never get approved, so I'm waiting. I'm giving it some more time before I go back and apply for an Amazon card, because I do use Amazon every single day. But things like, I got a Sleep Number card. Okay, I bought the Sleep Number, didn't like it. Now my balance is at 0 and the card's just sitting there. What am I going to purchase from Sleep Number? Nothing. Rooms to Go, I have their card. Rooms to Go I still use, but how much furniture are you going to buy? Right? So this is why I say kind of stay away from cards that you don't use every single day. I definitely would have a Walmart card or an Amazon card, because you shop there on a constant basis, right? So those are the stores that I would definitely say, if you shop at Target every day, then definitely I'd have a Target card. But you don't want to get a card like Cosmoprof and you don't shop there every day. Or gas cards or fuel cards are also really good cards to get. So I have a fuel card for our business side, and I use that steadily because I need to make sure that I have that deduction at the end of the year. And then I also pump gas every single day, so it's always going to be a help rather than a hurt. Okay, so now let's go to the unsecured side. So I gave you guys 3 secured cards, one of which being your credit union or your bank secured card, another one being Open Sky, which is a secured card, and then Capital One, which is also a secured card. They have both secured and unsecured. Okay, they have both. So let's talk about unsecured. So Credit One is a company that you can use to get a unsecured, what they call, these cards are called bad credit cards. The reason why they are typically known for people who have bad credit is because their interest rates are extremely high, okay? They're extremely high for a reason, because they know that they are typically for bad people who have no credit or bad credit, and they have very high interest rates. It's just kind of the one thing that's known. That's just the way it is. But when you're trying to build credit, do you have an option? Typically no. Typically no, you don't. Let's talk about, we'll talk about Credit One first. So I'm actually going to get their interest rates, or their current interest rates, based on just the internet, just so you guys know. I don't have a Credit One card. I did have one before. It was one of those ones that I just didn't. I have two bad credit cards from a long time ago that I kept open. You never close them. But they also have yearly fees. They also have high interest rates. So keep that in mind with these cards. Like, I'll tell you how they work. So Credit One has an annual fee of $75 for the first year, and then $99 after that. They also have high APRs, and they give you low credit limits. But sometimes when you don't have any credit, or your credit is just that bad, those are typically the cards you have to start with, right? So I also have, I'm not gonna say also, but Credit One is an option. I have First Premier Bank. First Premier Bank were the two cards that I got before I filed bankruptcy, because that's all I could have gotten before I filed bankruptcy. First Premier Bank is also one of those bad credit companies, or no credit companies. How it works is, when you apply for their card, you'll get approved for, like, let's say you get approved for $300. But within that $300 of unsecured money, your first year annual fee comes out before you even use the card. They're already taking out their annual fee out of your credit limit. So you automatically start with a balance of $75. So that's one of the things that I tell people, like, if you don't have a choice, go ahead. If you have to start somewhere, go ahead. But First Premier Bank, Credit One, those are typically the banks that are known for that. And they usually start you out with a very low limit, $200 credit limit, $300 credit limit. And then after a couple payments, you can apply for a credit increase, or they'll automatically give you one. But I can tell you how these creditors work is, when you apply for one, let's say you want an increase, they charge a fee for you wanting the increase. So the fee is usually 10% of whatever increase you ask for. So let's say you want a $70 increase, they'll charge you 10% or $35, whichever one is higher. That's how they work. So 10% of a $700 increase is $70. So I now have to pay $70 just to get a $700 increase. That is the downside to dealing with these bad creditors, but they are still in turn reporting to the credit bureau. They don't show as secured on the front end, and they look good on your credit report when you're trying to build your credit. Okay, Event Card is one too. But guys, if I could tell you to start with secured that have no annual fees, definitely. But sometimes you don't have that choice. So this is what First Premier Bank looks like. So you can have up to 2 First Premier Bank cards, okay? So that's what it looks like. I have a Platinum card, and then I have a Platinum 2.0 card. Once they see you have good rapport with them, they will allow you to apply for the second card. So you'll have 2, but you still have to pay those fees every single year. Everything you do with them amounts to a fee, and it's to their advantage, because they know if you close their credit account, it's going to hurt your credit. So they know that you're not going to close it, and that's why I say make smart decisions on the different creditors that you work with. Okay, make smart decisions with the different creditors that you work with. I do, since building my credit or working on my credit, I do also have an Apple card, which is through iPhone, through Apple itself. I got approved for one of their cards since rebuilding or starting to rebuild my credit. You want to try to stay away from applying for too many cards. It almost becomes like you get oh man, they just gave me credit. Wow, so I can apply for this credit, man. And then you start getting denied, and now your credit score is going down based on all these inquiries that don't turn out to actually be credit. The goal is to inquire, yes, but to also get approved at the same time. So that inquiry bounces off with the fact that you got $1,000 of increased credit. So it doesn't hurt. But when you inquire or apply for credit and you don't get the credit, it's a lose-lose. So now you got a hit because something hit your credit. Now you got an inquiry that sits on there for 2 years and you don't have any positive credit to reflect the fact that you applied for something. So keep that in mind when you guys are applying for these different cards. Definitely, like I said, a pro tip is if you're going to pay off your balance every single month, pay midway a portion of the balance, and then at the end of the month pay the rest, because it's going to report positively on your credit report anyway. Absolutely be careful about applying for too many cards. Yes, definitely be careful about applying for too many cards. That's very important. It really makes a huge difference. Okay, it really makes a huge difference. A creditor that I definitely would say helped my credit more than hurt it was Apple. And I was able to get approved for an Apple card with a lingering discharge bankruptcy in the background. I was still able to get approved for an Apple card. Who else did I get approved for? I was able to get approved for Rooms to Go, Sleep Number, Mattress Firm. I got those different cards and I ended up paying them all off, and now they're just sitting there. Fingerhut is another one. Fingerhut is one of those companies where as long as you're ordering from them, they will approve you for credit, but you have to keep ordering from them. So if you're not a Fingerhut shopper, I wouldn't say run to Fingerhut, but it is a credit limit that shows on your credit report, and they actively report it. And they actively increase your credit limit at certain times of the year for you to have more credit on there. But they do this thing where if you don't use the credit, they'll decrease your credit. Retail shopping cards also do the same thing. Retail shopping cards like Rooms to Go. Synchrony Bank is notorious for it. Synchrony Bank is who houses Rooms to Go. Mattress Firm, Walmart, Sleep Number. Synchrony Bank houses those cards. And that bank typically is a forgiving bank, because I actually discharged some of my Synchrony Bank cards and I still got approved for 3 more Synchrony Bank cards after my bankruptcy. And I actually discharged their cards as a part of my bankruptcy, because everything you have on your credit is what you discharge. The only thing that won't discharge is student loans. So everything that's on your credit is what shows to be discharged. And it's not really, oh yeah, I'm not going to do this, I'm not going to do that. Honestly, discharge everything. And whatever doesn't discharge, go ahead and keep it, like your student loans. But what I will tell you guys, when you're doing bankruptcy, that picking and choosing of what you want to discharge in regards to credit cards makes no sense, because the bankruptcy is still a public record. It's still a bankruptcy, and no matter who you don't discharge, it doesn't make your credit look any better. Yes, JCPenney is a part of Synchrony. Most retailers are a part of Synchrony. Most of them. And if they're not a part of Synchrony, they're a part of Citibank. Citibank, I can tell you, is not one of the forgiving ones. Citibank is actually one of the more complicated to get after a bankruptcy. Someone said, I need a secured card. I have 0 credit. Yeah, Octavia, I'm telling you, definitely Capital One is probably the easiest one to start with, or Open Sky. Or just go to your bank and apply for theirs. And the good thing about applying for the bank credit card is if you in turn need to get a line of credit, or you want to apply for a loan with that bank, you've built rapport with their other credit offerings, and they're going to give you more positive things at that bank because they see you have other things with them. So you want to build as much rapport as you can with your current bank and build your credit through your current bank as well, because that in turn is going to help you get mortgages, car loans. That's going to help you get other credit cards, lines of credit, low APRs, that kind of thing. So your banks are typically the best way to start. Community is another one, yes. Maryland, I can't really tell you a whole heap about Amex. I can just tell you that Amex is a charge card. It is not a credit card. So with Amex, whatever your balance is, typically you will have to pay it off within 30 days. That's why they call it a charge card. And then it's something that happens, I can't give you the deets 100% on Amex, but just know having an Amex on your credit file is awesome. Banks love it because they know that Amex is a revolving charge card, and Amex won't give just anyone their credit. It's very complicated to have bad credit and get an Amex card. Very complicated. And Amex cards actually also work with Amazon. So Amazon has an Amex card, and it's very complicated to get that card. But when you get it, treat it like straight gold, because every creditor will see it and love you for it. And Amex is one of those things where it's revolving. Yeah, I want a black card really bad, but I don't have one. All right, so I hope you guys got some good information from today's live in regards to credit cards for bad credit or no credit. Let me answer this question really quick. What if you have a default from school? How bad is the default if the person is trying to be an entrepreneur? I feel like I'm not taking it serious if I choose consolation of instead of rehabilitation. Okay, so let me explain to you guys about defaulting of student loans. That is probably one of the worst things that you could ever do. I'll tell you why. Defaulting on a student loan, number one, the IRS will take every dollar you have to pay that student loan back. They might not have started yet, but you will get a letter later on that they are garnishing any money that you're getting from them, because that student loan will never go away. It's the one thing that was put in law that no matter if you bankrupt yourself 3 times over, that student loan will hover around and pop right back on your credit the moment you finish your discharge. It will never go away. You cannot purchase a home with a defaulted student loan. It's very complicated to get a car. There's anything that revolves credit. Defaulting on a government-backed student loan is the worst thing you can do. Now, private lender student loans, defaulting on them, it actually looks like you just defaulted on a standard loan, but it still says student loan on it. But private lender student loans cannot garnish your tax return. The government won't do anything in regards to their loan because it's not a government-backed loan like a Stafford loan or one of those student loans. But when you're trying to have like if you have defaulted student loans, I'm going to be quite honest, it's better that you call that creditor and work out something to start paying it back, because it's not going to go anywhere. It's going to hover. And it is going to decrease your chances of getting credit in anything. So it's better you make a effort to even negotiate it. Even if you negotiate it and say, hey, let's say your student loan is $3,000 is what you owe now. Hey, if it's already defaulted, call them. Hey, I'd like to get this cleared up. I have $1,000 that I can pay right now. I don't have any more money. I don't have another dollar that I can extend you, and I don't want to make payment plans because I don't know if I'm going to have this money ever again. So will you take this $1,000 and go ahead and satisfy this loan? Because if a collection agency gets it, they bought it for pennies on the dollar. So the fact that you're even trying to pay it off is going to be amazing to them. And I usually start low. Okay, so if I know that I owe them $3,000, I'll tell them I have $500 and I want to just go ahead and clear it off. And then can you give me a $2,500 1099 something, and I'll file it on my taxes. But I don't have any more money. I just came into this little bit of money. I don't know when I'm going to have any more money. Can I use this and satisfy this debt? And you give me a letter that says that you took this as a negotiation and we satisfied the debt. That's how that works. That's how it works. Anything that you have in collections, you can do the same thing as well. Call them and give them a lowball ass number. Okay, you owe them $10,000. Hey, I have $1,000. That's all I have. I don't know when I'm going to come back into this money. I literally just got a check for $1,500 and I want to pay it off. But I can't give you the whole $1,500. I got a light bill to pay. But I can give you $1,000. Will you discharge this? And then they'll go and they'll hover around on the phone. Let me talk to my manager. Blah, blah, blah. They ain't talking to nobody. Them just sit on there and I look. Okay, and then they come back to you and say, well, ma'am, unfortunately, the lowest that we can take for you to pay this off is $3,000. The reason why they say that's their lowest is because they probably paid $2,000 for it and they want to make $1,000 off of you. Right? So then they'll come back with their lowest number. And I'm like, well, ma'am, I don't have that much. If they say, well, ma'am, you can call us back if you get back this money, but we can't do anything less than that, then technically that means that they purchased the loan for somewhere around that amount and they still need to make a profit. But still start low. Never go midway. I don't even go halfway. If I know I owe you 10, I'm not offering you 5. I'll offer you 2. Then they'll say, well, the lowest we can take is 2,720 cents. Okay. Am I able to split that into 2 equal payments, and will you to go ahead and delete it off my credit report? When they say yes, we'll do that. Can I get that in writing? Could you send that to my email in writing on your company letterhead? Because I want to make sure that this happens, and I need to have this in agreement before I will pay this money. You never pay it and don't get something in back from them. You never pay it and don't get a letter from them, because guess what? You can pay it and then in the notes, they didn't even put in what you talked about. And then they go and just say, well, we didn't say that. Okay, no problem. So if I'm going to do this, I need to get it in writing on your company letterhead. Could you email this to me? And they'll email you the letter saying this is what you agreed to while you're on the phone. This is what you agreed to, blah, 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 blah. Once you get that letter, then you go ahead and pay them. Then you go ahead and pay them. Now, Shelly, you said that's why you never ignore them. That's a lie. Listen to me. If you owe somebody money, the only time that I will literally pay something off is if you're trying to get a mortgage, and most mortgage companies will not allow you a mortgage if you have anything in collections. You have to wipe it out, right? But the only thing that I would negotiate is things that will hit my credit extremely hard. A car, student loans, because those things can hit hard and they hurt. They hurt because their limits are very high. So they're going to keep reporting that you owe them $60,000. Right? So those things I do negotiate. But creditors, the worst thing you can do with a creditor, if you don't plan on paying them, is answer the call. Because the moment you answer the call, they're calling because they need to affirm that it's you. So let's say that credit been sitting there for 5 months, let's say 6 years, 7 months. And you start noticing that at 6 years, 7 months, they're calling you. And you go and answer that phone and you confirm that it's you. And you start even a small piece of the conversation. The clock starts over on that collection. And now you've gone back to day one. And that 7 years starts over because they affirmed that it was you. So be very careful about validating any type of debt. Be very careful about how you answer your call. Creditors will call me. Hey, could I speak to Crystal Williams? Click. It'll be something from like 6 years ago. No, baby, I got 5 months for you to drop off. I'm not talking to you about nothing. I have nothing to say. I want you to drop off. So be careful about answering calls from creditors. If you know you have no thought process that you are ever going to pay them, do not answer that call. Okay. No, you don't want to answer them all the time, NW. That's the problem. If you have no object to say you're going to pay them, when you do answer that call, that means that you are now validating that debt. So if you don't plan on paying it and you want it to drop off, the worst thing you can do is validate a debt, because now the clock keeps starting over. And let's say that creditor sells it to another creditor. That new creditor now can call you because you didn't say that this creditor couldn't call you. You just said that you didn't want to talk to that creditor. It's very tricky to this game. If they sell that debt to another collection agency, that's now a new agency that can now start calling you. So now the cycle starts again. And let's say you're at 6 months, 6 years, 9 months, it's going to now start over to 1 year, 1 day. Now you're going into the 7 years again, and now you got 7 more years of this lingering debt. Yep, that's how it works. I already answered, so I have to talk to them. Oh, Lord, hopefully they'll give me a discount for the school loan. So, NW, if it's something that you know you want to pay off, because a defaulted school loan is like a dishonorable discharge in the military. If it's a defaulted government-backed school loan, please just work it out, because it doesn't go away. It will continue to hover, and it will affect any government business that you have. Okay? If you are trying to get a grant, you cannot get grants with defaulted student loans. If you are trying to do anything with the government and they see that you have a defaulted student loan, it is like a dishonorable discharge from the military. They frown upon it. No creditor, like a home creditor or a car loan, they will not grant you credit knowing you have this government-backed loan sitting there. Okay, so keep that in mind. But I hope you guys have an amazing rest of your Monday. Like I said, you guys, this is Money Monday. Today we talked about credit cards and secured and unsecured cards that will help you rebuild your credit. And I'll see you guys in the next video. Peace.